Good morning and welcome to this jointly hosted webinar hosted by Capium and Initor Global that this morning is going to really discuss with you and talk through some ideas and processes about how you can get your practice ready for MTD ITSA whilst delivering an effective personal tax service this winter and in 2025. And firstly, I just want to give a warm welcome to everybody who's joined us today. And please let us know in the chat where you're joining from, how you're feeling about this self-assessment season, what percentage you're through your tax returns, to maybe offer reassurance or terrify some of the other attendees. I'm joined today by Robert, who is Head of Customer Experience at Initor Global. Good morning, Robert.
Yeah, good morning, Nick, and thanks for the introduction. And as Nick says, a very warm welcome to our webinar this morning. As Nick says, we're going to cover fairly topical issues today around the looming introduction of MTD ITSA and how to get your practice ready for that, and how you might be able to use some of the experience of the forthcoming tax season for 2024 and also 2025 to get your practice and your clients ready for these major changes.
Perfect.
We're going to cover a range of complementary issues today to help you to prepare for that inevitable onslaught of work between now and the end of January 2025.
And can I quickly just jump in, Robert, to tell everyone that this webinar is being recorded. So please don't worry if you've got to jump out and come back. Okay, you will be shared a recording of this afterwards, and please feel free to share any insights or comments or questions in the chat. It'd be great if we can have some engagement. I just want to quickly say good morning to Anthony from Doncaster. Good morning, Paula. Good morning, Sorin. Good morning, Safraz from London. And someone has shared with us, Robert, that they're 65% through their SARs. The sun must be shining in Brighton, Nick. So good on you. Good on you. Yeah, as Robert has given a great introduction about what this topic on this conversation is going to be about. I'm a director at Capium, have been it for the past 7 years, and I'm hopefully going to provide a few tips and tricks to Robert's kind of discussions and processes. So Robert, please, kick on.
Okay, brilliant. Yeah, if someone's 60% through their SATR work, well done. Maybe we have the wrong people hosting the webinar today. But please share your experiences to help colleagues. It would be really appreciated. So maybe I'll start with the annual story of self-assessment work. And what does it feel like? Well, it's deja vu all over again. The inevitable peak of work accountants face on their return from their August summer holidays. That work is piling up just now. We're all charging towards this single annual submission deadline of 31st of January. And of course, we keep going even after that for those clients who just can't quite make it over the line. And what do we find when we come back to talk to our clients about self-assessments? The variable record keeping we've drawn to their attention over the years, some records incomplete and some still paper-based. So what do we need to do? We have multiple contact points with those clients and, the continual race to get the data in place to prepare that self-assessment by the end of January. And of course, there can be good reasons for that. Many clients are naturally averse to engaging in the process because they see possibly a large tax payment to be made at the end of the process. So it's painful for them financially and probably also painful for them to get ready to submit that self-assessment tax return. And it's also resource intensive for accountants, and especially those smaller practices who have to commit senior staff, senior accountants to what many of us regard as somewhat lower level and lower margin work. And there's also the human aspect. Accountants work long unsocial hours throughout the month of January and even towards the end of December to get ready for that inevitable peak of work. Just talking about people who are at 60% plus of their SETR work. When I was in practice, we dealt with around 6,000 personal tax returns every tax season. So literally every day in January, we had people working to get us through that workload.
Robert, could I quickly ask about how did you have enough capacity to deal with any last minute inquiries, or did you kind of shut up shop and be like, we're focusing on our own pipeline?
There was nothing sophisticated about the approach. It was just literally having accountants work long hours, weekends, and just ploughing through the work as quickly as possible. With hindsight, we could have done a lot more around automation. We could have done a lot more around outsourcing some of that work. But it felt that every year our clients could have been better prepared, and frankly, so could we. But heroically, accountants rise to these challenges, and we managed to get through the work and make some decent margins for those last minute clients who were quite prepared to pay more to get that SETR over the line. So again, some further context around this. This is high volume and it can be high risk work regardless of your practice size. HMRC reported last tax season there was a record number of 11.5 million self-assessment tax returns filed around the lead up to the deadline and then beyond. So that's quite a number, and that's only going to get larger as MTD ITSA is introduced. It's also high risk work because clients can make mistakes, records can be incomplete, and HMRC, frankly, are pretty unforgiving when fines and penalties can be issued. So it can be high risk work for those smaller practices who may find themselves up against a looming deadline. And of course, what we see in the market at the moment is many new market entrants and increased competition. These entrants are offering bulk processing, and it can feel like a race to the bottom in terms of pricing, which accountants feel compelled to match. Otherwise, they're going to lose some of their clients. And of course, margins are extremely tight, especially if you don't use incremental pricing. So if you keep your prices fixed throughout self-assessment season from now to the end of January, you're probably going to find yourself making no margins at all throughout January, or maybe even lose margins as that work is delivered.
And just to jump in, Robert, Dave Carney has shared that he's lucky at the moment that none of his clients meet I'm assuming he means the MTD ITSA threshold. And he gets about 50% of his clients done in April, May and June, and the other 50% during December and January. And so working long hours. And I was wondering, Dave, if you could share, or anyone share, do you have like a blanket rule of no more clients, or do you kind of add clients into the mix just to keep yourself on your toes? New clients, so you could do those kind of last minute returns. Be interesting to hear your thoughts or others.
That's really interesting comment, Dave. Promoting the benefits of getting that self-assessment tax return completed early in April, May and June. It does pay huge dividends for you as the year goes on. And of course, clients, they sometimes don't separate out the need to pay the tax they owe, which is at the end of January, with actually filing their tax return. So they can actually have some certainty around how much they need to pay, when they need to pay it. And of course, they may be due a rebate, which can be extremely welcome, and accountants can help with that. And of course, that's paid almost immediately upon filing. So there are a range of benefits that you can raise awareness of among your clients to get that work completed early. And of course, while we're delivering all of this work, we've got one eye on MTD ITSA. It's looming, and there is some action that you can take at the moment to help you maybe explore some opportunities which may arise as the MTD ITSA regime unfolds. First of all, you can look at embedding those SETR processes that are working well to flourish in this new MTD ITSA world. So that may mean more regular communications with your clients, possibly on a quarterly basis, to get them used to that rhythm of discussing issues with their accountant and become more systematic around communication on the whole. And also promote bookkeeping software among those clients affected by MTD ITSA, especially those that are wedded to the old paper records or are just don't use anything other than a basic spreadsheet to provide information to you. Look at ways of promoting free bookkeeping software just to get them used to keeping those digital records. And also look critically at your SATR clients and the margins that you make. Frankly, it may be time to disengage those loss-making clients, especially those that rely heavily on paper records or maybe only engage in the process once a year. So it may be time to cut your losses on those sort of clients. You'll also need to look closely at your engagement letters to make sure that clients understand their new responsibilities to maintain records and submit them quarterly. So don't overlook the need to make sure that those engagement letters are up to date. And also look at monthly subscriptions. That is a really good option to get a regular income flow from this work because you will be contacting clients throughout the year. So why not go for that subscription-based approach and spread the cost throughout the year for your clients? They will see advantages from that as well. Take the opportunity to re-engineer client communication. Automate wherever possible using bulk texts, bulk emails, and have a look at those commercial CRM systems that can help you automate as much as possible. And also look at outsourcing data collection. Outsourcers don't just provide, recurring compliance services like bookkeeping or accounts preparation. We can also help contact your clients to chase up those UTR numbers with HMRC if they don't have one. If they don't have a government gateway login, we can help with that. We can get in the queue to speak to HMRC, and we can also help track down those historic records with clients if they need to file returns from previous years if they were required to do so. And it's also a big opportunity to get your clients ready for MTD ITSA. So reinforce those basic points to clients that they will need to keep digital records. It's a deadline-driven approach to require to submit information to HMRC every quarter. And there is a new fines and penalty system using points, which HMRC will issue for any failure to comply with a deadline. It's important that clients understand the importance of that and that you raise awareness of it. And I keep coming back to margins and how you should look to increase those by 2026. Lay the ground for fee increases alongside more regular contact. When clients see that more sort of visible approach from you in terms of how their personal tax situation is progressing throughout the year, then that's an opportunity to introduce additional fees. And also look carefully at those resources that you have to deliver those services. Update workflows within your practice, roles and responsibilities, and also think about outsourcing as a way to preserve those margins. Sorry, Nick, were there some other comments in the chat?
Yes, there was, and I think I'm just grateful for Dave for sharing his information and suggesting that maybe some of the early work that he gets done is based on the client types that he has. For example, CIS clients wanting that rebate as soon as you can file those self-assessment returns. So I think that's really interesting. And Gary, sorry, I was laughing earlier. Gary was saying letting Jim the joiner loose with bookkeeping software is a recipe for disaster. And yes and no. Like I think most bookkeeping software, you can actually restrict the users to certain aspects of it, like just raising invoices, for example. But I would love to hear your thoughts, Garen. If Jim the joiner is falling into that MTD ITSA threshold, how are you going to tackle the additional kind of the requirements to stay compliant for Jim? What tools are you going to suggest to him? Or are you going to take that burden on yourself? And then are you going to price accordingly for that? So I think as we're going to touch upon later on this presentation, there are definitely opportunities or risks. It really depends on how you see it.
Yeah, absolutely. And that brings us on neatly to the opportunities offered by MTD and possibly to Jim the joiner. It may be time to have that conversation about whether sole trader, self-employed regime is right for him. Maybe a limited company structure, might be something that might work for him better, and he's handing more responsibilities over to his accountant. It doesn't, help everyone, but some of those tax advisory services and advice on company structures or sole trader structure can really help your clients understand their business in a bit more detail themselves. And of course, I'll come back to outsourcing and how Initor Global can help you around that. We can help review your workflows, your communication channels, the record keeping, and the onboarding of new clients who may be affected by the regime. We can help with all those sort of basic admin tasks that maybe you hadn't thought about using outsourcing for in the past.
And just to add, a little birdie called Nick has just messaged me just some tips that he wants to share about how we can be proactive. And he says just pushing clients to accept the income record of. Oh, this is a question quickly.
Yeah.
How prepared is my practice to deliver MTD ITSA? So if you address that, and whilst you're answering that poll, I'll quickly say what Nick said. Pushing clients to accept the income record viewer now not only gives us access to the PAYE info, including tax codes, but also getting that client set up on their own the government gateway account, so that when you onboard them onto MTD ITSA, it's a lot more straightforward. I do think there are at least a handful of dozen proactive steps that you're going to cover, Robert, throughout this presentation, that you can actually do to get started and just make that first leap into the MTD ITSA world a little less daunting. And just again, before we talk about that poll, Ian just said, we usually send out letters around this time of the year saying to clients that we'll only guarantee to complete their tax returns if they get the records in by the end of October. We also quote an additional fee if they bring their records in January. Seems to work quite well. The stick and the carrot approach. The last few Januaries have been relatively stress-free, and we've managed to get everyone done. So that's a great approach, Ian, and maybe some people might look to follow that in their own practice. And I think the only other thing I think the MTD ITSA will provide this opportunity is that if you are engaging with your clients on a more regular basis, I think you actually have the opportunity to showcase your value as an accountant more. You can actually provide that real-time insight into their tax affairs and give them that extra value. But I think we're going to touch upon that more. So I'll jump onto the poll results.
Okay.
Now, if I can go to where it is. I think some poll responses are still coming in. Oh, okay. Interesting. So 4% are completely prepared. I think you may be in the minority. And the rest is split between they're making progress as planned, and the majority are not ready at all, and maybe kind of putting your head in the sand a little bit until actually you've got to do something about that, which is a couple years away from now. So that's interesting insight.
Interesting, because both accountants and clients alike, they hate surprises. So the more you can lay the ground just now to get them ready for this new world, the more benefits that you will reap from that approach. So invest a little now to get a lot back as 2026 looms. And again, it's just worth rehearsing what MTD ITSA is all about. It's all about real-time reporting, and the government's aim is to reduce errors and improve record keeping. Even for Jim the joiner, he's got to think about how he can improve his record keeping as well. It does aim to reduce admin through automating processes throughout, and also increasing access to automation as well. And of course, with the government, it's all about tax revenues, and they want to reduce the number of errors and strive for more accurate tax returns. You will all know the taxpayers affected by now. For accountants, it's their self-employed, mainly sole trader clients, landlords as well. And looking at the income thresholds, they're set at £50,000 for 2026, and 2027 that will reduce to £30,000. And that is the income. It's not the profit that a sole trader or a landlord makes. So you're going to find almost all of your self-employed clients are going to be caught by this regime. The implementation date of April 2026 seems to be fixed. Of course, that can change, but as far as we know, that date is going to apply. And of course, HMRC is continuing to update the rules, and I'll take you through some recent changes earlier this year. Some of them welcome, some of them just at the margins, doesn't really affect the main thrust of the MTD legislation. So the end of period statement, that requirement has now been dropped. So there is no longer a step between the filing of the final quarterly statement and the final tax return filing. So it's 5 submissions for a tax year rather than 6. And I think a welcome approach now is the quarterly returns are now on a cumulative tax year to date basis rather than a standalone basis. That's really good news for accountants because you won't need to refile any returns which were submitted with errors in them. You can correct those errors in the next quarterly statement because the cumulative basis means that's a relatively smooth process in principle. At the very detailed level, there's some changes in the rules for foster carers and their qualifying care income, and those without a national insurance number as well. Another welcome change, I guess, for landlords is they can now choose not to submit quarterly updates of expenses where they own a property jointly. That's helpful if landlords aren't quite sure on the split of income and expenses until well into the tax year. So they might, choose to put more of their information in towards the end of a tax year rather than evenly throughout. And of course, more than one agent login is proposed now. The detail on that, as you would expect, is awaited, but that really applies if you have a different sort of a bookkeeper, accountant, and tax advisor helping a client. So more than one agent will be able to log in going forwards.
Can I quickly just jump in? Brilliant. Going back to the question that I asked Gary, and thank you for answering that really, about how he's going to tackle the challenge. But he's not sure that Jim the joiner, who earns taxable profits of £30,000 to £40,000 per annum, has no desire to use software and then is not interested in the slightest in increasing his accountancy fees for advisory services. And I think this is going to be a common feeling felt by accountants, but he will find that landscape everywhere he goes. So if it's not you having this conversation with Gary, and he leaves you, say, hypothetically, if he goes to another accountant, it's going to be the same kind of set of challenges that he's going to face. So at least in that instance, there'll be a level playing field. I don't think it'll be easy, but, at least, you'll all be singing relatively from the same hymn sheet. And just a couple comments from Dave and Mareza about it getting kicked down the road. I've had a few recent meetings with HMRC about MTD ITSA pilot scheme and the testing because we're doing our product development, and they seem very committed to getting this done. A lot of the initial kind of issues, like having 2 agents working on the same client, they seem to be addressing that. So it's not something that I think, there seems to be more certainty this time round about actually meeting their deadlines. I'm maybe not sure if that's the news you want to hear, but I think I would only share that just to maybe provide that insight.
Yeah, that's useful, right? Because obviously we have a new government now. There's a budget looming next month. And, the message is that they need to increase the amount they take in tax. And if MTD ITSA shows scope to improve the level of tax taken from self-employed and landlords, then it's going to be introduced. That's probably an easier win for the government, and one that it's easier to sell to people rather than increasing taxes and things like that. Okay, so just a reminder of the points-based penalty system, very similar structure to VAT. So if your clients are used to that, the VAT register, they'll understand how this works. But nonetheless, Jim the joiner might not know. he's going to get some fairly hefty fines and penalties if he doesn't comply. So MTD ITSA, it accumulates separate points to VAT. So if your client's VAT registered and also has to submit a personal tax return, they accumulate separate points totals. In terms of personal tax, 1 point is accrued by the taxpayer every time a filing deadline is missed. So there's a £200 penalty when the points threshold is reached and for every subsequent failure. And just to put that into context, if you miss the annual filing of the final tax return, it's a 2-point threshold for missing that. And there's a 4-point threshold for missing a quarterly obligation. So you can see how these sort of fines will quickly rack up. And you could find yourself in the unenviable position that some of your clients have accrued more points than Everton at this point in the season. So just make sure that you keep reminding your clients about this new regime. And of course, if your clients have multiple businesses, they're self-employed, a joinery business, and they're also a landlord, they accrue one set of penalty points at the taxpayer level. So that's important to understand as well. And again, at the detailed level, these points expire after 2 years of compliance for annual returns and 12 months for quarterly returns. So yeah, those points will fall off if you become fully compliant. And of course, the late payment penalties are on a sliding scale as determined by HMRC, but it can be up to 4% of tax owed. So really, taking all that together, it's a new regime for fines and penalties, and clients need to be aware of that if they do miss these deadlines.
Gary asks, how much additional VAT income has resulted in MTD for VAT? And I can just share that I actually went to a talk that was held by one of the directors for HMRC. And actually the implementation of MTD for VAT, I think she mentioned, brought in like £4 or £5 billion more. Don't hold me on those numbers, but the difference is in the billions. So that does kind of justify their actions. Okay, Robert, this is a bit more of a question for you. Sergio asks, how will they check the qualified income? Will they check the previous year's income? I mean, if in the tax year 25-26 the taxpayer exceeds £50,000, they will be required to step into MTD from April.
Well, we know HMRC is investing a hell of a lot of resources in its investigations side of the business. So I guess they'll come up with ways to track how income has been calculated over the previous years. I know you only apply the net position at the moment on the personal tax return, so I guess they'll come up with some sort of analytical software or analytical approach to this.
Yeah,
they may start with all registered taxpayers and submit, self-employed income and expenses. I really don't know.
And so, I think it's going to be pretty black and white. I think if you earn over £50,000, you will be expected to enroll into the MTD ITSA program. I don't think they're going to be it has to be over a 3-year period, for example. I think it's going to be quite black and white. Yeah. Rodri Jones asks, how can those billions be directly attributed to MTD rather than a stagnant VAT threshold? Good question. Or statement, more like. I didn't ask that at the time. So I will bear that in mind when I next see her at our next annual catch-up.
Yeah, I mean, it's only just been uplifted very marginally, the VAT threshold. And, the comments are absolutely right. All income tax thresholds have been frozen for a number of years now. That seems to be, what's going to happen for the next few years anyway. So more and more people are going to be caught by this regime going forwards. Okay, so I've got a couple of slides now on some of the actions you can be taking now. These may be in train, so please forgive me if I'm sort of preaching to the converted here. But nonetheless, just think about how you can embed some of the processes you'll need for MTD ITSA throughout the 2024 and 2025 season. And I'm thinking here about things like data collection, getting that information from your clients early, communication, speaking to your clients about, how are things progressing? Are you ready to submit your return yet? Are you aware of MTD ITSA and what you're going to need to do going forwards? So really think about those processes and how to embed them. Aim for that early completion and filing. I know, again, I'm talking to people who have really got this nailed down, but communicate the benefits of early preparation of a tax return and early filing. There's more certainty about the amount of tax to pay. They'll have more time to pay, or if they need to make an arrangement to pay, they can do that in a considered way. And as I said, they may also be entitled to a rebate, which is also welcome. And the earlier they get that return filed, the earlier they'll have access to that rebate. And also segmenting the client base and think about disengaging loss-making clients. In terms of segmenting that database, how do clients keep records now? Can you identify those clients who are very poor or no record keeping at all, compared to those who are fully switched on and are quite comfortable with the digital world? Which clients are going to need the most help with that transition? And are you best placed to provide that help? It may be time to disengage those clients, even though you may have had them for a number of years. But if you're not going to make any money at all out of them, why would you proceed with them? And reinforce that point that paper records are no longer acceptable. And also notify clients affected by MTD ITSA and their responsibilities for retaining data, maintaining digital records, and submitting quarterly. Come back to the point on engagement letters on that. Make sure those are updated so that those responsibilities are absolutely clear. And the more systematic you can make communication, the better, whether that's through bulk SMS text or automated emails. The more you can approach a canned messaging approach to put out reminders to all of your clients when deadlines are looming, the better. And think about whether your customer relationship management system, CRM system, really is fit for MTD purposes. That's if you have a CRM at all. And sort of second slide on delivering MTD ITSA. Think about gatekeeping your prospects. You'll have new clients approaching you all of the time. Check whether they're eligible for this MTD ITSA regime and the support that they would need. And it may be at that time you say no to a prospective client because they're just not ready to comply with the new arrangements. Identify those clients hitting the thresholds going forwards. Very similar to what you were doing for VAT and getting those clients ready when they were just approaching that £85,000 threshold in the past. And I mentioned a couple of times that the limited company structure may be a better option rather than self-employment if the quarterly regime is just too much for some of your sole trader clients. Take this opportunity to test your workflows, right from your CRM right through to the compatible software to submit those quarterly returns. Make sure that that's all fit for purpose. And of course, review the level of services you provide and manage the expectations of clients around that, and have a look at your pricing. If you can move to a subscription-based approach, that would be really helpful in terms of getting clients ready for this new regime. And just a reminder, the HMRC beta is still open. A number of accountants have already signed up for it. It'd be great to hear from you in the comments if anyone's went down that route. But there are some fairly detailed entry criteria. But there are some advantages from that. You'll get an early awareness of the MTD regime. You'll be able to identify potential challenges and sort of develop your processes and procedures to make sure that they help fit that new regime as best as possible. HMRC say they're in listening mode, so you have a chance to influence developments, and also it's a chance to show your clients that you're getting ready for this regime, and it really enhances the services that you can provide. At the very detailed level for your clients, there are some quite stretching entry criteria. I won't go into them all in detail, but if you are thinking about the entry to the beta arrangements, then make sure that your clients that you want to propose are in fact ready for that. Nick, is there anything to say on the sort of beta side of things?
Yeah, well, I was supposed to quickly publish this poll about whether your practice has a CRM in place. Oh, here we go. So we'll start polling that. And there was quickly a question from Geraldine. If your income goes below the threshold, can you opt out of MTD? And my understanding is an individual who is initially mandated to use MTD ITSA is that if their receipts threshold for over 3 years drops below the MTD requirement, so the MTD threshold, then they can opt out. So yeah, it seems like once you're in, it's been quite difficult to get out, and I'm assuming that would be below the 30,000 threshold as well. So I think we'll now quickly see some of the poll responses coming in. And while that is coming, about the MTD, it's a pilot scheme where Capium's been burnt twice, obviously, with the delay of this project. But where we are now at the moment, we're in the process of getting our production credentials given to us. And we had a very successful meeting of HMRC last week. Once that all goes well, I think probably in the next couple of months, we'll be actually opening the MTD ITSA pilot scheme for our customers who are brave enough to go on that journey with us as well. And Robert says, you have a great opportunity to help influence HMRC, but also you have a great opportunity to influence how our product works and how that can maybe create some workflows or approval flows or engagements with your clients. So at the moment, I'm just going to quickly run through, again, I'm very interested to hear this, actually. Does your practice have a CRM in place? 15%, I'm not sure if they're joking, said, what's a CRM? Less than 25% say yes. 10% say they can send a bulk email. And the resounding response is, no, we don't have one. So I'll be fascinated to know how you communicate with your clients in that instance. And I think getting a CRM not only will help you with actually managing your prospects and your leads, but also that client engagement piece.
Yeah, that's a surprise to me. I thought automation was the that sort of go-to approach for many accountants, but apparently not. I guess it depends very much on the number of clients you have, the nature of those clients. Some do that need that personal touch, that personal contact. But in terms of managing this going forwards, you're going to have to keep good records yourself about how you've engaged with a client to try and urge them to make those quarterly returns and provided support that they need. Okay, so if we move on to action for clients now, if they need to sign up for MTD ITSA, they'll need some basic information. They'll need a government gateway login, they need a UTR number, an NI number, and they'll need access to compatible software. So any clients you're taking on between now and April 2026, you need to make sure you've got all those sort of basics in place to get them registered and signed up. You also need to get them comfortable using bookkeeping software. They may require some assistance with that to get started. If they're using basic bookkeeping software, which is not compatible with the filing arrangements for MTD ITSA, then you're going to have to get some bridging software in place to make those quarterly returns. So you'll need to understand what sort of bookkeeping software your clients are using, if any. And then that software needs to be compatible with HMRC going forwards, as I said. Get your clients used to quarterly record keeping. I mean, this is going to be a major change for many self-employed clients. They need to get used to this and get used to this pretty quickly. And of course, you will need to promote ongoing learning and continuous knowledge with your clients as well. That may be through online arrangements. You may have sort of workshops that you can run with them, or through training manuals. You can have those online as well. And of course, rules may change going forward. So you need to keep your clients up to date with all of those requirements that HMRC are introducing. Compliance really is at front and centre of all of this. So you need to raise awareness of that with clients and the importance that they need to follow these new rules. At a very detailed level, there are some exemptions that are allowed. They need to be applied for. For instance, if they are digitally excluded, that could be quite a difficult exemption to prove. But if you feel that any of your clients are exempt, then you need to understand that and help them speak to HMRC about how to gain that exemption. And of course, use your experience of MTD for VAT to introduce this new regime for income tax self-assessment. So apply those lessons around accurate record keeping, compatible software. Apply those lessons about maintaining quarterly records, or even more regularly, that sort of monthly bookkeeping we talked about, which may be helpful for many of your self-employed clients in terms of personal tax. Those regular touch points with clients, you're already doing that, I guess, through VAT, but at least quarterly that may be needed for some of your clients on their personal tax affairs. I always think there's scope for keeping your clients aware that there may be more tax efficient ways of doing things, or they may require specialist tax advice at certain times throughout the year. There's going to be changes in the forthcoming budget in October from the new government. So there may be an opportunity around sort of capital gains tax advice and inheritance tax planning as well. So you can introduce all of these potential services on the back of those sort of regular communications with your client as well. I've mentioned the self-employment or limited company reviews. These are often overdue. So if there's scope to do those, make sure that your client understands the most tax efficient structure to deliver their business. I mentioned client risk a number of times. Look at this from your perspective. It may be necessary to disengage those clients who are not able to comply with the new regime. They will take up a lot of your resource and a lot of time contacting HMRC to sort out any problems that they may have. Keep coming back to pricing. Look at scope for monthly subscriptions, and look at this as an opportunity to have a more realistic pricing regime for the services you provide throughout the year. Aim for that early filing in 2024 and 2025. There are many benefits, as I've already mapped out, and some of you are already following that approach in any event. And it may be a chance to identify any gaps in skills across your practice. And that goes for non-accountants as well. Maybe you employ people to have direct contact with clients, client services managers, that sort of thing. So make sure that you look at those roles and responsibilities, any training that's needed around sort of customer care, customer satisfaction. Make sure that you address that well in advance of introducing these new measures. And of course, I would always say you can build capacity to deliver all of this through outsourcing, whether that's at the end of the process, preparing the self-assessment tax return, whether that's undertaking monthly, quarterly bookkeeping for your clients and helping them with their quarterly filing arrangements, or even collecting data from the outset. Outsourcing can help with all of those things. So looking at the personal tax work that you can outsource now, just at the detail level, we can help with HMRC registration and getting UTR numbers from HMRC, data collection, especially historic records as well, tax computations, preparation of SA 800 for partnerships, SA 100 for individuals, and any prior period returns that need prepared as well. We can help with historic claims that you may need for your clients. We can stand in line on those HMRC sort of help desks and so on, and we can also, using our own software, file the annual tax return as well. Some of the benefits of outsourcing work, I hope that anyone who's tuned in to previous webinars will be aware of this. You will have access to a large pool of talent from our offices based in Ahmedabad in India. You'll have that tax expertise when you need it, so you can have our services on an ad hoc basis and just pull it in as and when you need it. We can provide admin support and help you manage that peak of work as well. And overall, we're here to help save your time and save your resources through reduced costs and help underpin your pricing arrangements as well. Prices stay fixed throughout self-assessment tax return season, So if you are using incremental pricing, then you've got a chance to help improve your margins as well. And throughout all that, we do assure quality and compliance throughout. Nick, is there anything you want to add to any of that?
No, I think just to add that, if you are worried about the cost implications of MTD ITSA, I think outsourcing is one, tried and tested way of mitigating those costs, and whilst helping you kind of deal with those challenges, but also going back a step, looking into a software that has software that can provide you as a business with a CRM functionality as well as another proactive step you can take. So I think there should be a few good actions and takeaways for our attendees.
Yeah, and I think this slide just brings together all of my previous comments. Again, just assurances around data security. Initor, we are GDPR compliant. We've recently passed our biannual ISO 27001 audit, so we are accredited, and we have data security assured through remote login access arrangements to your server, or you can use our secure server as well. And just to give you a flavour of what the prices would look like, if you need senior tax accountant support, we offer full-time equivalent and half-time equivalent arrangements. You'll see that those are mightily cheaper than the UK resource, but we also offer price per return as well. We'd be happy to talk to you about that at an individual level, depending on the volumes that you're anticipating throughout 2024 and 2025. So just keep that in mind if you're thinking about outsourcing work, and come and have a chat to us here at Initor Global. So just to draw all that together, concluding remarks, effective delivery of SATR work over the next 2 tax years, it really does offer a platform to get you MTD ITSA ready and make a success of that new regime for your practice and also for your clients. It's an opportunity to embed those good practices and processes now. Prioritise client communication and automation wherever possible, and also undertake that internal resource review to deliver what you need to under the new MTD ITSA regime. Take this opportunity to upsell services, pricing reviews. You're going to be in contact with your clients on a more regular basis, so always use those opportunities as far as you can to upsell services and disengage those problematic clients. You will come to regret it if you keep with those clients that you have had for a number of years that are problematic. They're going to struggle with this new regime. And just a final comment from me, outsourcing, it's a ready-made solution to help deliver your SATR work and ensure a smooth transition to MTD. That's all I have to say. Those are my contact details. Feel free to connect with me on LinkedIn. Those are our email, contact address, and of course our website as well. So please have a browse there. You'll find out a lot more about Initor. I'm going to stop now, take a drink of water, and hand over to Nick, who, as promised, is going to let you know about some exciting developments at Capium. So over to you, Nick.
Yeah, and thank you so much, Robert. And whilst I'm doing that, just a quick poll, just to say, if you want Initor Global to reach out to you, please do let them know. Okay. And the one thing I just want to say is that I know in the accounting community, there's a lot of fear about MTD ITSA, and I think that comes naturally with any change. But for me, self-assessment returns, from my perception of it, it's been a bit of a race to the bottom with costs and self-assessment returns. There's online companies that can file a return for £100, and all that has done over the years is just actually devalue the accountant's proposition in this whole situation. So I really see MTD ITSA as righting those wrongs and actually being like, you now, for every client that you have who falls into that threshold, you can actually do that, advisory work. You can actually, do what you studied and tell them about how they can make most use about the allowable expenses, or, how to maybe avoid certain pitfalls. So please see it as an opportunity. and if you get your house in order, you put those processes in place, you have those communication tools, it will be an opportunity. Because I genuinely believe a lot of accountants will see MTD ITSA and be like, as it happened with MTD VAT, they will see this as something that actually I'm going to hang up my boots and retire. So I think there'll be a new pool of clients looking for an accountant. One quick question before I go into my piece. How will outsourcing reduce costs when we have to pass them on to clients? And I can probably answer that for you, Robert.
Yep.
If outsourcing can reduce the cost of a UK resource by 50%, then you've already reduced the cost that you may potentially have to hand over to your client. So I do think it's an opportunity. Look, outsourcing 3 or 4 years ago is something that no one really wanted to consider. You only have to go to Accountex London to see how prominent outsourcing is and how many firms are taking it seriously. For me, it's a tried and tested, proven way to help you accountants either grow, manage your workload, or deal with upcoming compliance changes. Gary asks, why do you think that advice doesn't currently happen, Nick? Well, because I think I think over 50% of self-assessment returns are done in January, the horse is already bolted. So all you're doing is you're rubber stamping that tax return. You're just doing the sums, and if people aren't giving you that data until January, when you've got the file to return, all you're doing is filling out the forms for them. And just from the accountants I speak to, they are so much more talented than just a form filler, so that's why I think that advice doesn't happen. And maybe, Gary, if a person comes in and goes, I'm only willing to pay you £250 for that return or whatever you charge, how willing are you to actually give that extra value? So that's why I think it's going to reset the relationships. And quickly, I'm just going to jump on to who Capium are. We couldn't give you such a value add webinar without a plug about our software, of course. Look, Capium's a fully cloud-based accountancy solution. Just on the topic that we mentioned today, we have a CRM in there. You can send out bulk emails, bulk SMSs to your segmented client base. You can have deadlines and task management. We're currently working on our MTD ITSA pilot scheme, and of which we'll be inviting our brave customers, if they want to take part in that, they can have a cheeky insight into how that all works. So that's what we do. Also, in our bookkeeping module, you can give free access to your clients, even if it is information that you don't want to use to do a return. You can actually just get them familiar with that product offering. We've also created a tool, and you're going to hear a lot more about this. It's called 365. It's an end user app that enables it's for your clients to do data collection and for you to communicate with your clients and do two-way document sharing. There's a list of the features for accountants, for clients, and also it's going to be a lot more cost effective as well. So there's a question here that David goes, not sure about outsourcing. I may feel it's loss of control. That's what a trial is for, Marisa and David. There are companies here that are doing really well in the UK marketplace. As I said, Accountex, I think there was over 40 vendors there. So there are quality outsourcers there. I think you just need to trust them like you would any other business relationship. And if it works for you, continue that. And Robert, I think you may want to add something.
Yeah, I think that's a great point about the perception that you're not in control of the work. But that's where the partnership approach comes in with good outsourced suppliers. We have an open line of communication to our operational managers. You'll have a personal relationship manager as well. So if you get any issues about the progress of work, you can immediately find out. I think in the past, there was definitely a tendency just to outsource work and forget about it. But it's now a much more sort of a collaborative approach that certainly we take with clients to keep them up to date on where they are with work. And also work that's maybe not progressing as well as it should, because clients may not have produced the information as promised, or they need to be chased for more information about unusual transactions, that sort of thing. So I think outsourcing has definitely moved on from maybe some of those perceptions that were around a few years ago.
Yep, agreed. You know, and like, as you know, purchasing a new software or dealing with any potential new business relationship, you've got to build up your confidence with that. So dip your toes in, start off small. And then if it gives you the reassurances of quality and control, then look to scale. But, you know, many large firms, top 100 firms, even have dedicated outsourcing directors that operate those functions in their business. So I do think people are missing a trick there. And my last point, just on the Capium 365, this is our product to help our accountants tackle with MTD ITSA, okay? You will be able to do quarterly approvals within this product as well. And it's our attempt at trying to make your lives easier as the accountant to deal with that extra data collection, that extra engagement. So please watch this space. I believe my colleague is going to put a link up in the chat about a recent white paper that we've done, Capium and Initor have done, about outsourcing and the benefits of it. So that should be shared, or it will be shared after this webinar on an email. Our LinkedIn details of Robert and mine I'll share them again in the chat. Please reach out to us if you want to continue this conversation or talk about any of the companies who we work for. There's a poll. Would you like Capium to get in touch with you as well? So please let us know about that. I'm just looking at some of these questions that have crept in. Yes, Rodri, we will do. Please LinkedIn me as well, and we can happily have a chat about what Capium can offer. It's great to hear that you may be interested in our product. But also, we will be doing more content, more pieces on MTD ITSA. It's a huge change. So you probably have to get used to mine and Robert's face a little bit more as we talk about this topic. This isn't a CPD certified webinar. I'm not sure where that has come from. There's been a few questions asked about that. This is just us talking about an up and coming change in the industry. And yeah, if you want to know more about 365, please watch this space. My marketing team are going to make a big song and dance about it in the next couple of weeks. I'm really excited. And of course, we will be at Accountex North on Tuesday. I will be there in person, in flesh. So please feel free to ask me any questions there as well. Look, thank you everyone for attending. Thank you those for engaging. It's been a really interesting webinar, and I hope there's some takeaways for you all to act upon. Robert, I've really enjoyed that. Thank you so much for your content. And I think we've got another webinar coming up in the next couple of months.
Yeah, I think let's keep a hold of those questions. There's a whole webinar in some of those questions. So yeah, it was great to have such sort of two-way communication on this. It really helps.
Brilliant. Look, thank you, Robert. Thank you, everyone, for joining. Enjoy the rest of your day, and we'll speak soon. Cheers, Cheers. Bye-bye.